If you're a business owner or real estate investor asking, what are the best business loan interest rates right now in this market, as well as how about for real estate financing needs, and perhaps you're struggling to figure that one out on your own or not, you've come across sources, questionable, is it up to date, and more, and want to really have an answer given to you from an expert, then this is the video meant for you. Hi, this is Michael with Viral Funding Solutions. I'm a business funding expert who works in all real estate financing, business financing on both ends of the spectrum, and much more. I run multiple businesses on my own. I have the digital marketing agency, lead generation business, health affiliate marketing business, other verticals there. And these are ones that I started way back in the days. And then I have other ventures, this now being my primary focus as a business funding expert who's funded a lot of clients. And people ask, why you? It's one thing to answer why Viral Funding Solutions, and that being the amount of experience. Loyalty is huge for me. That's like number one. Loyalty, honesty, reliability, flexibility, versatility, the experience, and more is there. My values, my aspirations, my beliefs, where you are trying to get to, and how I can level with you. I've been there in one way or another, in one shape or another. And so coming from this background and having once worked in this financial logistics position where I couldn't move up higher, I had to go back on unemployment benefits because they were relieving a lot of people for huge contracting companies servicing HP and PCELF and a few other companies out of not my fault. But at that point, I decided, do I go back to school and get another semester in? Because I had already studied. I went into school for university, played a little bit of Division I soccer, studied a little bit of sociology, moved into chemical engineering. That's how my brain works, math and system oriented. I'm a cerebral, I'm introverted. And then from there, I moved into business because I saw the market and I wanted to start a business, and having to work in various roles in the field, not in the cubicle, construction, manufacturing, the aerospace company, and more. And then over time growing, and then having to be in that position where I had to go back on unemployment benefits, food stamp cards. It was not a great feeling at all. And I didn't want to continue to feel like I was letting my family down, even for the littlest things like going out for a meal, or maybe I could or couldn't pay, and I just felt guilty, and for other purposes. And at that time, though, I was preparing to start my business, and that's where I ventured out. That's the short story of it. But for you, if you're trying to find what the best business loan interest rates are for a specific service, for a numerous amount of things you have now or will have in the future, a lot of us, we look at the market now and we want to look at what it's been in the past, what it is now, what could it be in the future. It helps us better prepare how we need to go into business, how to continue our ongoing business operations, and how we use those funds effectively to generate better gross profit margins, understanding your cost of goods sold, your cost of services sold, and all these other components of helping your cash flow as well as helping your profitability, EBITDA, and so forth. But the interest rates right now, I don't want to say suck, but in a way, it is a little bit unfortunate that people have to go in at those somewhat high, but they're still low. For like prime rates right now, by Wall Street Journal prime rates and so forth, you're seeing around 8.25%. And especially if you're getting like an SBA loan right now, which are very popular, I'm doing a lot of that. It's been more popular now than it's ever been, because not just because of the lower interest rates, but because of the market, the volatility in each and every industry. And what you see, a lot of people are buying into the fact that they should buy a business. And I want to give a recommendation to a book that I recommend each and every one of you pick up and think about looking into if you're trying to buy a business. And there's other resources out there, but this is a huge one. This is the playbook, and it's called Buying the American Dream, right here by Matthew R. Meehan and Luigi Rosabianca. Great book to read, pick up. So if you're looking to purchase your next business or a complete new business that you're getting into, and I mean that by you're just getting into business, you want to purchase a business, you have experience in this industry or in a similar vertical or horizontal and it makes sense, that's a great book to pick up. I know there are a lot of like resources online and other things to do, but that's a great one that I would use. It's like a Bible that I would reference to a lot of. But right now, the SBA loan interest rates, you're looking at the 7A being around 8.25% plus 2.75%. And I know, guys, this isn't like the most attractive video. I know a lot of you guys are like out there trying to find those EIN only, those no doc, and yeah, no doc to some degree, but you're not looking in the right places, or you're trying to only find an EIN only when it just EIN only business loans, like you're not going to be accepted as in you're having your social security number added. And we have to verify credibility, worthiness, the track record. Is that the actual person that we're going to lend on? Do they have an ITIN or an SSN, or what's going on? Are they a U.S. citizen? Like, how are we going to lend somebody when they don't meet the criteria? And the lender only has two things they're worried about. Is one, will they pay us back? And two, what happens if they don't pay us back? The name of the book, Buying the American Dream. Great book. You can find it on Amazon. It's a low cost. What did I get it for? Let me actually find, I think it was like $7 or something. Let me remember. Some time ago. Paperback, $12.23. Kindle, $2.99. Hardcover, $26.22. You guys need to be jumping on things like this. You are most welcome. Thank you. But yeah, this is the kind of stuff that it transforms your education. A lot of you guys want low interest rates. I want to, but a lot of you guys don't even take the time and energy to even understand and educate yourself on. I can tell you how many people, and I get a lot of people, and I remember people, by the way. It's not like, oh, he has a lot of volume, you must not remember. No, I remember. And are you memorable too? And are you trustworthy? And are you loyal? See, it comes down to character at the end of the day. That's what matters a lot. But let's get back on track with business loan interest rates, and then I'm going to open it up to frequently asked questions in about the next 5 to 10 minutes. It's a Friday. I want to keep it as short. And there's a lot of content that I can go into this even deeper on. But SBA loans, cream of the top. Everybody wants those. 8.25 plus 2.75, anywhere between 200K to 5 million in that range. You can see SBA 504 loans falling underneath that, even like 6.5%, 7%, even less than that. 5.5, 5. It's a 504 loan. It's based on real estate. And so it's a little bit different. The SBA 7A and 504, there's parts to it that are somewhat the same and what it would fall under. And it just depends on what you're trying to do, and I can help you with. But 8.25 plus 2.75, you're looking at 11% plus. Now, where we were about last year, at the end of last year, we were about 10.5%, 10.25 to 10.5%. Then they moved up to 10.75, 11%, now plus. Now, if you're getting less than 200,000, in many cases, you could say that you could get plus 3.75, plus 3.75 to 6.75. I've even seen that. It just depends on the risk associated. So now you're bleeding into that earlier teens, 12 to 15%, later teens in some cases. And that's just an SBA loan, depending on the type that you end up getting. Now, if we work backwards from that SBA loan, then we can look at some of the options from, let's say, the bank term loans. And those you can see anywhere between 7.99 or so to about 15%. I'm seeing a lot of, but it's common that you'll see 7 to like 20%, if not 7 to 30%. I've seen that on the risk association with the credit, cash flow, and a few other things. That's why we're looking at it more deeper. And so if you're already falling between that 7 to 18% range, that's very good. And for a lot of you go, well, it wasn't what it once was. Yeah, but your business isn't once what it was too. Or is it? Or is it so stable that you haven't had to worry about cash flow? You haven't had to worry about profitability. You've only gone up. So you kind of have to think about the markets and how they are shifting. And if you're not getting in with the times, you could be losing a lot. You could be losing already a lot of product. You could be storing a lot of inventory on your shelf that doesn't get moved out, or doesn't get moved out fast enough. You're not clearing your shelves. You're incurring a huge expense and a liability just by having that. And so it's eating up into your cash flow. And even if you had cash flow reserves, that's not doing you any justice. Now you're having to turn your profits that you've earned and recycle them into your business, and it's not really helping. It could be a temporary amount of help, but a lot of you guys are having a lot of setbacks. And I can go deep into how to fix your cash flow, profitability, all these other things, but let's not spend time on that. So now you have underneath that a little bit, we go into the collateralized options. The collateralized options that can vary in the type of collateralized. But for these lenders, these private lenders, they want to see for a business side at least $1 million in annual gross revenue, 750,000 and above. Depends on the type of collateral, but you can look anywhere between 7 to 15, 7 to 12%, more or less. And those are good figures to go by. 7 to 15, 7 to 18%, even at that. If it's the most extreme, sometimes it's plus or minus. And so it just depends on the type of collateral, inventory. Is it account receivables? Is it commercial real estate? Is it developable land? I can go deep and deep like no other. And a lot of the information that I can go deep into is not publicly released. And a lot of this that these lenders, they don't share with publicly, and they don't always share it with their brokers or agents because they don't have that connection with them. But I've built enough of a solid relationship with just about all of them. And what I question, though, a lot of the time isn't the efforts on my part. I question the efforts on yours. And so, like anything in life, you have to understand that there's one thing you say, and there's another thing that you do it. For me, as an introvert cerebral, you hear me here talking, but you guys don't see everything that I'm doing on the back end. As much as I can put it in a story, I can put it in many formats, I do a lot. It's a Friday now, I'm more lenient. I looked at documentations earlier from some clients that are getting processed now, others that have taken their offer. Another person the other day who was not happy because we adjusted their offer, and it had to be adjusted for a few things we were seeing. And so adjusting that offer, having no prepayment penalty, I got to the real conclusion of why, and there's more reasons why they didn't take the funding without me asking them. Like I knew, and I told this to my team. I'm like, that's the big problem, and that's the reason why they're not taking it without me even having to get that from them. I know it. Because if you're saying that you want to pay something off early, let's say, in 30 to 60, 90 days, but yet you can't pay it off in 30 days, why can't you? That's the question. Why can't you? So if I know your revenue, if I know how much you deposit in a month, what's your current month, what could it look like the next month? You're already enduring a loss. Like, I know that won't be paid in the first 30 days. Not even in the first 45 days. You're looking closer to 60 to 90 days because you'll have the funds in the account to pay that off. Now, without you telling me that, I pretty much know these things. I'm a math guy first. I look at the numbers, look at the deposit, look at everything. So the question is, are you making an emotional or are you making a logical decision? A lot of you guys make emotional decisions. I don't want the interest rate. The IPR, 25, 30%. And then when I ask you about your numbers, well, I think I believe I'm going to make 15. Well, yesterday I spoke to a gentleman, and I didn't get too deep into it because I could have demonstrated that example like much more. But for his landscaping company, 75 to 100,000 more he's going to make. And how much time is he going to make it with what he takes? It makes sense for what he needs to use the funds for. And so if you can't get these SBA loans, I know a lot of us want these up to 30-year amortized home mortgage, these EIDL loans, or these other types of loans, commercial property mortgages, even up to 25 years, 15, 20, 25 years in increments, balloon payments, everything else out there. But that's just not the reality of the situation you are in. And so what you need to come to terms with isn't the interest rate, but the benefit exceeding your repayment. How much do you take and how much do you make with what you take? What are your gross profit margins now? What could it look like with taking this money? Well, I'm going to drop from 25 to about 20% or 20 to 18%. But why are you dropping? Because there's other molded expenses in my business that I haven't cleared up yet. Well, what do we have to focus on then first? If you could relieve those expenses, or if you could drop a specific product or a service, or if you could collect those invoices much faster from the clients. See, we don't move fast enough to justify taking the money that we get when it's more of a medium to higher rate, which I'm going to get to in a second. So underneath that one, then you have the revenue-based products. And that's where we get more into those medium to higher rates. You're getting a picture here where I'm going, so the common theme to what you're hearing here is have higher funding details, have higher, better time in business, have better revenue, have better cash flow, have better profitability, your EBITDA, everything of all of this, you're looking at it from the bank term loans, you're looking at it from the SBA loans. The collateralized is a little bit different. That's not all that's derived from that. But then underneath that, you have the medium to higher rates. And you're looking at factor rates between 1.19 to about 1.55. yeah, you can turn it into an interest rate, although it isn't how we amortize these. But if it was all making sense to you, if you're in business, you need to know your numbers, period. But I run everything and I'm just kidding. I get that. But at a point, sooner rather than later, you got to know these. Because if you're taking money, let's say you're taking $35,000 with one of these examples, and you're paying back $45,000 to $50,000 with it, and your cost of funds, medium 10 to 12 plus thousand, and if you have early payment discounts, you factor in that with the amount that's already been due or paid in full, how much of an early payment discount will you get? Is it beneficial to you? It's always better to pay things off earlier if you know what you're doing. If you don't, and you need that timeline to go further, then okay. But don't make a decision based on just your emotion of it. I've never done this. Yeah, I'm here to guide you. I'm not here to pressure you. Show me your business. Let me see your tax returns if I need to. Let me see your P&L. Let me see your balance sheets. Let me see your debt schedule. Well, this is why you're going wrong in everything. This is why now we just spent a call that didn't even need to be even a call for you to do that. Like that's why I'm very energy and time effective, guys. This is why you don't get a phone call from me. This is why I have other processes to do this, and it's more effective when you get that. So what I mean by it is I have a questionnaire form down below or in the bio, and if you fill this out, I will get back to you, and if you have it, you have it. But if you fill this out, I know how to pre-underwrite files. So what I'll do is I'll analyze, evaluate, and give you a proper email/PDF response on your best funding option and options thoroughly broken down based on credit, cash flow, collateral, business credit. You either have one of these three, two of these three, all three. None, business trade credit. With, use business trade credit. I have people in my inbox right now, I want lines of credit after I showed them. And people telling me, well, I don't take the time to read. I'm a business owner who's been... Oh my, the excuses are just phenomenal. And okay, yeah, let me tell you, I run 3+ businesses myself. How am I here now, 11:33 a.m. Pacific Standard Time, when I should be doing other things? For one, I cleared up what I needed to in my schedule Monday through Thursday. When I get done here, I have to go do some questionnaires. I'll get caught up on more of them tomorrow. But then I'm going to check in with my digital marketing agency, lead generation, and affiliate marketing. I got to go do some SEO stuff on my search console. How do I get that? Because I'm very energy and time effective. For a lot of you, don't know how to be that way. You've only known one way or two ways, and that way isn't really helping you grow. It's not helping you grow as a person. You're not. If that tells me you can't even read a simple PDF, I don't care how long that PDF is, then I tell you not to read every part of that, and I show you where to look, even after I've shown you that, and you still can't, who's the one that has the issues? And I'm not trying to be mean or aggressive, guys. This is just tough love. I know some of you guys will take it out of context and go, oh, that's not who I am. And I'm a Libra, if you guys didn't know this. I'm a very cerebral, introverted person, so I hope that message does get across. And let you guys know that there's no room for shortcuts. Okay, underneath the medium to high rates. Let's just continue a little bit on that. Sure, the rates are not going to be favorable most of the time, unless your credit, your revenue, your time of business, your industry, you're an A-tier client. Then we get you rates between 1.19 to 1.30. Well, I wanted a 1.25. I didn't want a 1.45. Who are you to say that you're going to get a 1.25 when your credit is like 580, 600, your revenue is just 15,000 a month, and you have 2 years time in business or whatever the numbers are there? It doesn't make sense for you to get a 1.21 factor rate. And that meaning that 1.21, or let's just round it up to 1.20, multiplied by 20,000 in your funding amount. Or let's just make it easier then and say, like the example of 30,000 paying back 43,000, 1.43 buyer rate, etc. I don't want to get into the buyer-seller rate and all that. It's a different component. Okay, well, can you take 30,000 and make more than 43,000 in what you're repaying and the time you're repaying it. If you can't and you're going to break even, that could still work potentially. Are you going backwards? Okay. And so who's at fault here and who's to blame? Nobody is. But we got to look at ourselves and say, what do I got to do to be a better fundable client? What do I have to do to start getting those lower interest rates? Good question. So without going too far into these factor rates, and that's based on future receivables, if we advanced you 20,000 of a 1.27 paying back 27,000, we're getting a future percentage of your future sales and how that is in those receivables. And I'm not going to get into the dynamic of all that now. So below that, then you have credit cards, personal and business. So you have unsecured, secured personal, business credit, secured business credit cards. Well, what could I do there? You could get 0% interest with business credit cards. And I'm not going to get into all the how and the qualifications to all that now. But yeah, if you have the right credit, there's not a catch. The catch is what you're not doing. There's already a lot of people who don't even run a business who have shot down credit and want to get started. Like, I can't tell you how many times that I try to help somebody, but they come to me with, one, it's okay that you don't have a business yet. Totally okay. But you're coming to me with 500 credit or 450, 600, even fair credit, and you want what? You want to purchase a business. I probably wouldn't even give you my money when you're coming to me with that. Oh, and then now there's attitude and effort. Go fix your character. I'm tired of it. And so many of you are in a place where, and I was this when I started my business, I didn't understand personal development. I've never been bad, but I didn't have 100% the strength here and the health and the relationships, concrete, day to day, until I worked on those things and then I realized it. So a lot of you guys go into business thinking that it's all about wealth, but you just neglected the whole this. And then now when I get a shady person who comes to me, I can tell you just by seeing emails. And that's why I vet people through emails a lot of the time, because I could already tell the shadiness of the person just by the way that they respond. And it could be something to do with how stressed they are because they can't find what they want to find or they can't get it. And so you think I'm going to take that? That's not a problem as in I can, as a doctor, that I'm willing to solve. You don't come to a doctor and start spewing all the hatred to them and start bashing them because of something you are going through. I get it. But you don't come and do that to me. That's not fair. I don't know what I did to deserve that, because I didn't. And so like right now, I'm getting a lot of emails from people who all I do is have compassion for people like that. I don't have hate, just compassion for people like that. And they'll respond back with things like, well, I can't see the email. You send me a PDF and I don't have the time to see the PDFs. And I go, So you're telling me that you want a phone call, but you won't take the time to just read something for 5 minutes? No, I can't just sit there and read. That person's gonna be an adventure, very likely, to work with. As in, it's not about. And I get the whole, no call, no personal relationship, or no call, no email, or this, but doesn't make sense. See, you're not seeing it from me. You have to understand from my point of view where I'm coming from in all of this. As much as I put myself in your shoes, I get it. But does it make sense to do? Now, I'm getting all of these emails from a lot of people. Others are just like, thank you. And the majority of them in this market are very happy that I sent them the information the way that I send it. Questionnaire, analyze, evaluate, proper email/PDF response with your best funding option and options in a highly personalized and customized email/PDF response. Even detail per detail to what you can and can't qualify. At least you know when you have it all in one place. Information that isn't even publicly released. Wouldn't you want to have that and not be in a position where you're just, I gotta go find another video, I gotta find another blog post. Instead, you have the best sources from the best organizations, lenders, and providers, and I give you detail per detail, as well as here's where to start, here's where to go next, here's the next part, here's the conclusion, here's the roadmap, here's some extra material that nobody else is sharing with you. That would save me, I would save me my whole rest of my lifetime, if I'm being really honest with you. One thing too with personal loans, those can be low, of course. I'm not gonna get into all that now on the qualifications, but they are relatively low, 7 to 18% or so. But the thing is, it doesn't matter how much I share with you guys this information if you guys don't ever do anything about it. Like, I could tell people who are loyal and who are not because I'm an observer of everything. I'm a true, like, introverted observer. I have ambiverted, extroverted qualities. When I need to speak, I'll speak. And a lot of people, they listen. And it's because I don't always have the most to say, but people will know that I back it up. Oh, I need to hear back from you in 2 days. I'm going to give you a response back in a day from now. I just have to clear this up sometime between this time. If I even gave you that, even better. All right. But other those of you, no, a lot of you guys are really just, I don't know. It's just a lot of unpredictability with the person. And that's why I've always said, if I'm leaving, it's not because of the money. It's not because of I can't provide enough value to people and help them change and even change them as a person. It's just a lot of them are already set in their ways. And also, it's just too unpredictable. Even when that doesn't change, they get themselves in the way. They sabotage themselves. And that's the problem when it comes to helping somebody get funding. It's not, from the experience I've been in, it's not on this end. It's on that end. See, I'm sure a lot of you like the material where somebody's talking fast and they're just... See, these are things that you can't just look at how fast or how slow somebody says something. It's about what, yes, but how they say it and how they deliver it. Also, one thing I want to make mention of, that's where I'm going to leave it. I can go into more in different types of interest rates with a lot of different products. But let me see if I can reference. I want to reference this part. Okay. Just using this as notes for bulletin points. A lot of you guys don't have the credit, right? That's the problem. There's so many problems. You have the revenue, but you don't have the credit, or you have all of them. The one thing in this market that a lot of you should be like pouncing on is real estate. And I know a lot of you guys are going to get into, or it's not a good market for this and that. I get it. I absolutely get it. Whatever it is you're doing, multifamily, there's rentals, apartment complexes, commercial, we can go on. And I can even give you guys numbers on how much of loan to value, how much ARV, how much if you got this amount from the bank or a mortgage broker, or if you're trying to do this through me and in other ways on $1 million valuation and what you need to get loaned out. Maybe you get loaned out 80% of that. Maybe you get $800,000 or $850,000, whatever the case may be. and then your down payment is 200 to 250,000 or whatever it is, and so you can kind of come up with a percentage on that property of the down payment, and then you have to factor in your income and expenses from that. And so think about the property fees, management fees, all these things that are cost associated with it in like a business, but a property, in a rental property, and whatever you're trying to do with real estate. You guys got to factor in, at least be conservative, between 40 to 70% or half of the amount. And so you're cutting from back of that, and then you're going into how much you actually owe the bank, percentage on interest. And so what you're left with when all the numbers come out, you're left with probably like 15 to 25,000. And so how do you multiply that? Well, it depends on the property, one. Two, depends on getting more properties. And so without going too much into all of that, I can go into it even deeper because I also have a lot of people that I help on the real estate side. Just know that why I put that up is because a lot of you guys have property, and if you don't, you can seek out a credit partner. Who do you know that has investment real estate that they own? How about somebody who owns commercial real estate? Or they have commercial real estate, I should say. You know what would be smart to do is partner up, or hey, if you know them, or hey, it's a friend you're seeking help with. I need help to get my startup funding, or hey, I have a lot of debt that I'm incurring. I can give you a percentage of my rental income and what I've earned, and I can pay off this and this amount of time. Like, you got to think about leveraging a partner. If you don't have the credit, if you can't even do a home equity line of credit, a home equity loan, heck, you can't do a cash out refinance because it's not what you have, or you can't do a sell lease back or some higher tier of collateral where they have minimum annual revenue requirements for certain things. You don't meet those. Could I see if there's a partner who's willing to help? No, but all of us, we want those quick credit unions. Everybody's jumping on credit unions right now like it's night and day, although it's still hard for many to get approved for and get what they need and get enough of what they need. So what is the logical thing of all this? Continue to apply for more credit unions and just see what happens? Or, hey, I know my credit is shot and I could have fixed it in 6 to 8 months, but I decided I'm just going to go apply for assistance, government assistance, and just continue to do that. Or are you going to fix the diagnosis, and can you seek out and leverage a credit partner? Like, I would be doing that over and over and over again if I had somebody who was willing to do that for me. Yeah, I have a rental property, I have equity in this property, can I pull from? I'm going to buy another rental. Boom. I'm going to recirculate that money, get the cash flow out. Boom. Recirculate. Make more. And so, yes, equity, liquidity, the hugest thing right now that I'm seeing. It's the biggest movement because it's become much harder to borrow, and the dollar is only going so far anymore. And so if you have a high stake or a high amount of equity that you can pull and inject from, as opposed to you using your business, you just using your personal credit, and even if that's not in good position, because that's what the market is saying right now, it's hard because I'm telling you guys, I have a lot of volume in clients that I personally help. I'm not saying that it's just like I'm sending them and not ever looking through their docs or doing all this stuff. It's evident to me, and that's why I ask people, do you have commercial real estate or any investment real estate that you own? No, I don't. I don't even have my 401k. I don't have enough of. I can't leverage a credit partner. I can't even do those micro, like, you got like no savings, or we don't want to eat up more into your saving. Like, how much more can I do? I got to give the person, no, I won't even give the person, because if they're already in a vicious cycle of not being able to make their own payment, I was like, what the heck, what am I doing giving them my money? Well, I'm going to pay you back in 3 months if you give me this. Yeah, but you just shown me you've missed, like, you got to pay your creditors. You got the bills that got to be paid. That's where the money's going to be going first. And then the rest of that, what I gave you, what return and investment am I getting from that? If I'm giving you $50,000, but you're putting $2,500 per month in these payments, you got to make these payments. Now you're in around 27 to 30,000. You have about 10 to 20,000 remaining, And what did you need to do with that 10 to 20,000 you remained with? It couldn't even get your foot off the ground. Not even one. And so I'm expecting my money back in 3 months. Now you're facing a hardship. Okay, maybe I'll give you a month to 2 months. Or I'm more than willing to work with you and give you more time. But see, that's craziness. Somebody who does that is getting in themselves. The person who said, yes, you could do that is the one at fault here. The one who's encouraging and saying it's okay is the same person who doesn't understand their own finances and their own business. It's the same person who's commingling funds. I'll go on for 30 more seconds. Actually, guys, I do have to get going. I'm going to get back to an email here. I have to do a few things. But hopefully this message got across and you guys have a better understanding. All information, bio, description down below. Thank you all for tuning in. Have a great rest of your Friday. And I will speak to you all in the next one. Take care. Bye.